So what we find is that the elections in France tend to be more volatile for equity markets than other developed markets. So that's number one takeaway, that perhaps this volatility could continue for a bit longer around French stocks, right? It doesn't change the underlying story of recovering EPS and recovering GDP in Europe. You have to put this in context. But of course, volatility could continue, right? So into the election, we've been neutral. France actually has underperformed already before the election announcement. In terms of sector-specific stocks that are very heavy in France, but these are allocations for the stock 600. We are now neutral. Luxury goods, we are neutral in banks. We are underweight construction materials, and we are underweight autos, overweight industrials.
That's interesting. Some people might suggest that what we're seeing in the banking sector, sure, there's uncertainty in the short term, could end up being a buying opportunity.
Yeah. Absolutely.
How does that fit with your thinking?
Absolutely. They've gone down a lot, right? And they are definitely very cheap, but the news flow continues to be negative for now. So it's, of course, evolving story. We are watching it very carefully. But the major change in the allocation from being very pro-cyclical and with a mixture of value and growth cyclicality in the overweight, with the exception of autos that have been an underweight, we now have more of a growth tilt.